view FOMO into positions. FOMO is a function of two things you're missing. You need to know where to trade from, and you need to know what to look for. So in this video, I'm going to be going over the only ICT concept that you need to become profitable, and that is the delta. So trading fair value gaps or trading ICT concepts is only good when you know the delta. If you know the delta inside fair value gaps, you can reduce the amount of FOMO and therefore massively increase your strike rate. Now, how does this work, right? So why can the delta quite literally change your life, right? So the delta is basically the colors you see inside of the candles, right? So the delta we define as the ask minus the bid. So if we look carefully in these candles, what you can see is blue and red. Now, all you need to do is read the delta inside fair value gaps to catch bullish trades and to catch bearish trades. And this is what we're going to go over in this video. So the first thing is we need to define delta. So delta, you need to know three things when you're trading ICT concepts. The first is the bid. So this is the left-hand number. These are the aggressive sellers. The ask is the right number. These are aggressive buyers. And now the delta, which is just the difference between the ask and the bid. So we first need to understand what a candle is, right? So we're specifically not going to read the numbers. We're going to focus on the delta, and the delta is going to give us a clear indication as to how to read price. So this is a green candle. And I want you to really understand that in trading, the color of the candle or the size of the body or the size of the wick does not matter. What matters to us as traders is simply, for this video especially, but just in general, it is the delta. Now, how do we define delta? We define delta as the highlighted color for a particular row. And so what do these numbers on the row represent? So I've kept them small on purpose because you don't need the numbers to understand the delta. But it does make sense to understand how the delta works, right? So how do I define delta? So it's the ask minus the bid. So what that means is it is the right number minus the left number. Now the delta is very simple and very easy to understand, and you can spot it from a distance, right? Anyone can spot the delta. So here we see a blue delta, and down here we see red, right? This is a red delta. So what this means is the right number minus the left number is positive. So this is 515 and 140. So it's 515 minus 140. So that number is going to be a positive number, whatever that is, 300 something. So this is a large positive delta, hence why we have a large blue box. So what that means is for this stock or this instrument, so this is a candle from ES or the S&P 500 futures, it shows you for this particular price, let's say it's 67.50. At 67.50, we see 515 contracts of the ask versus only 140 contracts on the bid. So there's significantly more aggressive buyers, that's the key word, hitting the ask than aggressive sellers. Now with negative delta or red delta, again, very simple to spot, and you're going to see how and why you can use this. When you're using negative delta, you just flip it. So the ask minus the bid is now a negative number. A negative delta means there's more aggressive sellers than aggressive buyers at that particular price. So let's say this is 67.50, this is 67.20. We see a lot of aggressive sellers at 67.20, and we see a lot of aggressive buyers at 67.50. Now, this is why the delta becomes important, right? And we're going to kind of zoom into this in a bit more detail, right? So let's kind of understand this over here. So for traders who have been trading for a short amount of time, I'm going to explain to you exactly how this works. So what we see, for those who trade ICT or any of these, nonsense concepts, what you need to understand is this. We can see here a break above, it could be a breaker block, a fair value gap, an order block, no matter what it is, you are looking for essentially a break in a retest. So this here inside of the key level is where you want to focus on the delta. Now, this is a trade I took on Tuesday, the 14th, so just after the bank holiday. What we see here is we see a lot of red. So we're not focusing on the numbers, we're focusing on the delta. The delta is color coordinated. So what that means is here we have a key level, this blue shaded region, which is the same as this gray shaded region. When you're trading ICT concepts, such as fair value gaps, that's my favorite ICT concept. It's the only concept I use. I am only interested in the delta at these key levels, right? So what does this represent? When we see price breaking below and then breaking above, we see a lot of negative delta, which means aggressive sellers are present in the level. So if we break above the level from basic, I guess, logic, what does that tell you about the level? Well, it shows you sellers were aggressive, but sellers had no follow through. So this negative delta over here, right? If I kind of zoom in a little bit more, this negative delta over here, this is negative delta, and we see a rejection higher. So when we see a negative delta and a rejection higher, this shows us that aggressive sellers have failed. Passive buyers are therefore present. Buyers are in control of the price. So the mindset shift you need as a trader is going away from entry models, away from indicators, away from drawing lines and patterns to understanding the delta, understanding the price action at these levels, right? This is the difference between trading and effectively gambling. You need to understand who is in control at your levels. Is it the buyers? Is it the sellers? Now, the same thing is true for the flip side, right? So if we kind of bring these together, this yellow box here, so we've seen price breaking below a level. This can be a fair value gap. It can be a breaker. It can be an order block. It can be anything. But when you want to enter at this level, again, this is the break and retest entry. What do we see over here? So this is a screenshot of a bearish key level playing out. Now we can see a lot of positive delta here, right? 282 for 609. Again, the numbers are not important for this video. We see a lot of positive delta here. Then we break below the level, right? Notice how we have a finished auction, right? 0 for 52. So we see a finished auction. The auction between buyers and sellers have been wiped out. We see 52 aggressive buyers, and then we break below the zone, right? Big red candle afterwards. What does that tell you about the buyers, right? We know that there's aggressive buyers at this level. The reason we know that is because buyers themselves are aggressive, and we see that via the delta. Now, when we break below this level, it means that sellers are passively in control. That's it. Now, if we go back to the slides, here we are. So the next thing we need to know is this. I want every single trader to understand what is going on inside of a fair value gap, right? So price comes into a level, we break the level, we retest the level, and then we go higher. Why is it that some of your retests work and some of your retests don't work? Well, the reason for that is very simple. You use order flow upon the rejection. So in these wicks over here, right, in this key level, you're only looking at delta inside of key levels. You're not looking at delta everywhere, you'll get lost. You want to look at delta inside of the key levels. So here we can see a lot of red. We see a lot of negative delta. We see a lot of aggressive sellers, right? We see sellers trying to be aggressive, but these sellers, essentially were not successful. If we break above this initial break, so we break above with this candle and we have a rejection. We have these rejections. Rejection, retest, market structure shift, they all mean the same thing, and they're useless unless you combine it with what's going on the right. So you need to know that sellers here are failing. When we see a break above, this is what we call an absorption. It's an absorption because sellers or aggressive sellers have been absorbed in this region. Buyers are in control, right? That is the essence of order flow. The other thing I wanted to break down is a finished auction. So in this case, I know the numbers are very small. It says 100 for 0. So 100 on the left-hand number, 0 on the right-hand number. What does that mean, right? So the bid in this case is 100. The ask is 0. These are aggressive buyers. Now think about it from a logical perspective. If you see 100 market participants at this price, so let's say this price here is 67.50. I keep using 67.50. If this is 67.50 and you see 100 for 0 and the market breaks above the zone like this, what does that tell you about 67.50 over here? So at 67.50, 100 market participants went in hitting the bid. They tried to aggressively sell. They tried to break price down, i.e. below this level. So this is why key levels are very important, and this is why having a fair value gap or having a support or resistance is important. Now, blindly trading off them with market structure shifts, fair value gaps, breaks of structure, even EMAs, that's not viable. You need to see who's in control between buyers and sellers and trade in line with that. And so 0 for 100 tells us two things. Number one, sellers are aggressive. Delta is negative. You can see over here, red delta. But also this 0 is interesting. When you see a 0, you want to see a 0. This is what we call a finished auction. And it essentially tells us that there's no aggressive buyers and sellers trading here. There's only aggressive sellers. So a 0 for basic knowledge, basically means it's a finished auction. This indicates that buyers and sellers, aggressive buyers and sellers at that price, so 67.50, let's say, are no longer interested in trading at that price. So what does that tell you? Well, it tells you that the market's going to move in one direction. Now, it's your job to figure out that direction, but by having a finished auction, it gives you a stronger indication of a reversal, of a rejection, right? Of a break, right? We're all trading reversals and rejections in some way or another. We enter and we want to see a reversal in our favored direction. Having a finished auction increases the likelihood of a reversal happening in any direction, right? It could be bearish or bullish. Now, to find out whether it's, in this case, a bullish rejection higher, we see again, negative delta, a break above the zone. Sellers were aggressive, but sellers were not rewarded. Therefore, buyers, passive buyers, are in control. That's what's important with the order flow and the footprint charts. So I'm going to be going over my pre-market plan, and just a long I took on the 14th of October, right? So why did I take this trade? So this trade, very simple. We had 3 steps to it. We had a fair value gap. So we had a key level. That was my key level. We entered inside the key level, and notice how we had an entry below the daily opening price. So for those who trade ICT concepts, I use fair value gaps, and I use the PO3, specifically the daily and the weekly opening price. So in this case, we had the Asian session here. We've swept the Asian low, and we haven't swept the Asian high. This is golden. This is the AMD or the daily cycle, lots of different things, daily power of 3, accumulation, manipulation, right? And I'm looking to catch the distribution. So the way you catch a bullish distribution is simply by buying below the daily opening price. So this is the daily opening price over here. Now, the daily opening price is important because I want to be buying below it. So there were so many confluences for this buy trade. Price took out the Asian low. We hadn't taken out the Asian high. Price is below the daily opening price. Price also came in and tested this area of this fair value gap, which is my supply, which is my key level. And we're going to be going into key levels and why it was a good trade. So this was the trade itself. We had break and retest. So if you look over to the left, we had price breaking. We did have a retest, and we really rejected higher. And I'm going to be breaking this down in a bit more detail. So that's what we're going to go over now. So basically, if I kind of scroll up a little bit, let's go to the, okay, let's just going to scroll up and have a look at this. So what made this a good trade essentially to get in, right? So this was the, well, okay, so we're too far up. So again, this is the Discord. I put my ideas in this and stuff. So we're going to be going over essentially what made this a good trade. So if I just kind of find it, so this was the trade as well itself, right? So here we are. So this was now this is around 10:15 Eastern. So, and I want traders to understand what was going on. So this was my key level, right? So again, what makes a key level? So this price point was 66.46 down to about 66.37, 38 area. So around 67.40 was where this true rejection happened, right? This is what we call negative delta. So let's kind of pair this with what I was looking for that day on the chart. So this was the trade itself, right? So about a 1.8 R, again, executions at 66.48 at around 18 past 10 or 10:18, closed the trade at 5.42 in profit, right? So that was the trade, about 1.8 R, risked about 200, well, risk free about 227. I did trail my stop and I closed it around 1.8 R. So I didn't even hold the whole way, which is an impatience issue I have. Just being honest, right? So again, I trade from one fair value gap to the next. But in this trade, we're not gonna focus so much on the entry. We're not going to focus so much on the target. We're going to focus on the entry. What made me enter over here? Why was this a valid trade to enter from? So this is why, and we're going to break down the entry. So my entry was at 66.48, and I want traders to understand what was going on over here. So when we come into a key level, we can either buy or sell. So in this case, what was going on? This was a breaker or an ICT breaker. So what happened is price was holding as supply here. Price melted down, at the start of the session. Then we broke higher. So what this shows us is that price was holding as supply, and we failed to hold as supply. All right. So that's something we want to be focusing on, right? So here, what we saw is we saw price holding its supply. So we broke to the downside and then we broke above the level. So what we're looking for is a break and a retest. And this only happened with one candle, which is fine. Right, that's part of it. Sometimes it could be multiple candles, sometimes it could be one candle, sometimes it could be 10 candles. It's up to you to see the delta at key levels, which is what we're going to be focusing on. Right, so we have our key level resting over here. So what we can see is we can see price peaking its head above the zone. Right, notice how we have a heavy blue volume over here, blue delta, sorry. Again, what does delta mean? This is the topic of the video, right? What does delta mean? Delta is the ask minus the bid. Here, delta is blue, blue is positive, blue means there's more aggressive buyers. So think about it like this. Blue means aggressive buyers are trying to drive price up. That's simple to understand. And we see the markets actually breaking above this level once and twice. Now, what I want traders to focus on is what was going on inside of the level. So here, this candle here, very, very telling, and we break above the candle. What's also interesting is the candle just above. So here, and also here as well, and technically here, right? Move away from looking at candle patterns, market structure shifts, breaks of structure, liquidity sweeps, PD arrays. Move away from that. Once you have your key level defined, look at how the delta is behaving at key levels, right? Trading is about delta at key levels, not anything else. So when you have a lot of red delta, ask yourself this question. Have these aggressive sellers, these negative market participants hitting the bid, right? They're hitting the bid, right? We had probably a decent 1 minute of selling, right? So between 66.45 and 66.40, round about this area, there was a ton of aggressive selling. Now we broke above the level here. And we continue to, reject these aggressive sellers as we broke above the body here. So who is in control of the price, right? When aggressive sellers fail to break below the level, we see price breaking above the level. Who is in control at that level between buyers and sellers? Well, the answer is negative delta with no reward means that there's a passive buyer stepping in over here. So passive buyers go in with limit orders. So there's aggressive participants going in with market orders and limit orders. What you're seeing on the footprint charts and what's translated in the delta are only market participants. They're hitting the bid on the left-hand number. They're hitting the ask. So here we had a ton of aggressive sellers failing to break below this level. We see 2 breaks above. This means that buyers are in control, and this means you could have caught a trade like this. Now that trade in itself was a very, very successful trade for those who took it. It rallied all the way up to, I think, 10R or something crazy like that, right? So that's what I wanted to go over in terms of my Tuesday's buy trade. But fundamentally, going back to this question about why the market moves up and down in the first place, why does the market move up and down, right? So a key level holds as supply, sellers are in control. A key level fails to hold, sellers start to fail. Key level starts to hold as demand, right? Sellers are aggressive, and as price breaks above the level, those sellers have failed. This is basically how a level holds, right? So focus on the last 2 sections I've done here, right? So key level starts to hold as demand, sellers are aggressive sellers fail to break below the level. So that is exactly what happened on Tuesday, right? So what happened is key level broke above, aggressive sellers came back in, these aggressive sellers failed, we break above. This means that a supply zone has now flipped to a demand zone, and that is the reason we bought. It's as simple as that, right? So, and the last thing to finish off on is for the presentation is here, finished auction, right? So seeing a 0, on this case the ask side, seeing a 0 gives us a strong indication that the reversal is going to happen, because when you see a 0, buyers and sellers have agreed that they're no longer interested in trading at that price. So you can see via the order flow footprint charts that a reversal is much more likely because there's a 0 on one side. We call this a finished auction. There is a much higher probability of a reversal when you see a 0 on one side of the footprint charts. So that's something to look out for as well. Now, obviously making this video, there was another huge sell-off the next day, so we're going to kind of break through that as well. So this was the sell-off from Wednesday the 16th. So what happened was we came into this level. I took a dumb trade over here. We came into this level. This is the level from last week, key level. And we're going to go through the same process, right? So first I tried a short, dumb trade, completely dumb trade, lost out nearly $300, dumb trade. That was a trade, so almost got stopped out, just stopped before the wick. I guess the wick took me out. But this was the winning trade. That was a very, very aggressive short that went all the way down. So the question is, what was going on in this key level? What was going on in this price action, right? What made this price action successful to sell from? Well, it's the same thing as before flipped on its head. So we're looking for this case, aggressive buyers to fail. So here was my entry, and that was my initial TP, about a 1 to whatever it is, 1 to 1.5. So without even diving in, right, what we can see is we can see a lot of aggressive buyers, right? Even here, blue delta at the top, right? Even this candle here, this is an aggressive red candle with buyers at the top. So buyers themselves are constantly being rejected. So we see sellers in control at this region, right? The reason I know sellers are in control at this region is because the aggressive buyers have no follow through. Instead, the aggressive buyers have negative follow through. So basically prices going down despite aggressive sellers being present. So aggressive buyers have failed, aggressive sellers are in control. And this was an absolutely monster trade. I didn't catch all of it, but I think I caught whatever it was, $495, something like that. And we really had a melt off, right? So catching trades like these can be simple if you simply understood how to read the delta at key levels.